I think right now is when people are starting to really see the need for some advice. When markets go up
Absolutely.
and markets go down, and we just wonder, and the more you're closer to retirement, this gets to be a real big issue. So we go to financial news sometimes, and we look for the experts to tell us something. This is Ed Yardeni. You'll see him a lot on Fox News. He's one of those economists there. Here's what he says about the markets and the economy right now.
Yeah, there's plenty of things to worry about, but the market is actually holding up pretty well. I mean, we're still basically in correction territory. We got very close to bear market for the S&P 500. The NASDAQ got into a bear market for, a few days, and now we're back in correction territory. I think we probably made the low in this sell-off on April 8th, right before the April 9th shot to the upside. I think, Americans are great. When we're happy, we spend money. When we're depressed, sometimes we spend more. As long as there's a wherewithal, and the initial claims data show that the labor market's hanging in there remarkably well.
Oh, so he's claiming he found the bottom, he says.
There you go.
All right.
I hope he's right.
Yeah, I do too. Yeah. We have been bouncing around an awful lot, but when somebody says something like that, Jay, what do you think? I mean, it is nothing more than a guess, is it?
You mentioned this is the time people start to look for advisors, somebody to help them with their investments. This is also when our clients need us the most, right? When everything's going great and the market just keeps going up, well, that's great. But when they really need us is when it's scary, when there's times like this, when we need to review the strategy. How are we structured to deal with events like this? And a conversation we've been having a lot is that this is a particularly difficult time to manage money and make predictions. And the reason being is that a lot of what's going on, people keep using the term, it's a man-made problem, self-inflicted injury, whatever you want to use. I'm not on that train, but it's certainly not a regular economic environment either. Like, at least there's things that we can look at. We can look at unemployment. We can look at defaults on credit cards or repossessions of vehicles to kind of gauge, where are we in the economy? Is it strong? Is it starting to weaken? And maybe make some decisions based on this. I can't make decisions based on a tweet, right? So that's what the issue is with this, that it's making it difficult. And I'll share a quick story on the importance of not making rash decisions when these sorts of things are going on, right? So we've got a few minutes, right, Randy? I can go into this.
Absolutely.
Okay.
Yeah.
So we had a client. After this event, I told them, I said, hey, look, this relationship is not working out. You're not really letting us do the job that we need to do. And we had a call from him when things were going nuts, whenever it was, a few weeks ago. And he said, I want to get more conservative. I want to get more conservative. I'm very nervous. And, we tried to talk him through everything, explain everything. And he had his mind made up. So, he's a boss. Okay, we'll go ahead and do that. The next week, he called back. It was April 7th. And I'll tell you why I remember it so well. It was April 7th. And he said, no, look, I just want to get out of the markets completely. Like, I want to trade this and sell this and buy this money market. And I talked to him for a while, almost an hour, trying to rationalize everything and go through it. But he had his mind made up. So we went ahead and did that. The next day was the day the NASDAQ was up 12%. It couldn't have been worse timing if he tried.
Oh, gosh.
And, since then, the market hasn't gone straight up, but it's recovered a lot of the losses. And he has missed out on all of it.
Gosh.
And it's a shame. It's a sad situation because he's not going to make those losses up again, right? Like that's gone. And that's when we have the conversation. Look, if we can't help you kind of manage this and walk through the strategy together, there's really not a point in us having a relationship.
Yeah.
Because this is the end result of that of what happens with that.
Yeah, just the knee-jerk reaction, the emotions that go along with it. Nobody likes to lose money, but it is a little bit of the price of admission. I mean, we heard Warren Buffett speak, and, he talked about he's retiring. He's 94 years old now, and somebody asked him a question about the current market, and he basically said that if you can't handle the swings that we're handling right now, and he doesn't think this is a big deal, that we're going through right now, you shouldn't be in the market. And,
he's absolutely right. He's absolutely right. And we've talked about this before on the show. Is, you know, for a couple of years there, 23 and 24, when everything was just fine and dandy and you were just making money kind of no matter what you're invested in, we had to try and pull people back from the aggressiveness that they wanted to take with their portfolio. And the story we tried to tell was, you're actually not this aggressive an investor. It's just everything's great right now, so you feel you can take more risk. Well, the opposite is true when this is going on, right? Like that gentleman I just referenced, he's a pretty stable, rational guy in general until something like this happens, and he thinks that, no, I can't invest in oil. I have to be very conservative. He's not really. It's just things are not going well right now. So you tend to skew towards that side of it. An even better phrase I heard was Warren Buffett's right-hand man who passed away, I don't know how long ago it was, 12 months
Charlie
ago.
Munger,
Charlie Munger, yeah, that's right.
Yeah.
And there's a clip of him going around, and I don't know how long ago this was. He looked pretty old in it, so I'd say it's fairly recent. Maybe it was from 2022 even. And he said, you know, unless you're prepared to accept a 50% decline in the stock market 4, 5, 6 times in your lifetime of investing, you've got no business being involved.
Wow.
And that's a pretty strong statement.
Yeah.
Right? And that's why we always talk here. I'm sure people that listen to us hear us bang on about having a plan, having your assets allocated in various ways, not having everything at risk, having something guaranteed so you got stability. This is why. It's times like this. Those are the reasons why. And while I can't promise anything with investing, what I can promise you is anybody who's listening to us now who is going to have a 10, 15, 20-year time horizon for their investments, which is probably most people that are listening, this is going to happen again.